Oh yes guys, welcome to this tutorial on leverage trading, and in this tutorial I'll show you what you need to know in order to get your first trade started, in order to get your first profitable trade started, most importantly, how to sign up, how to use it, which buttons to click. We'll be using Weex for this tutorial. I'll show you everything, how it works, how to set up leverage, how to ensure that you don't get wrecked, how to ensure that you protect the downside, and so on and so forth. This is all very important. And many people also have this bad picture of leverage trading as if it is something bad, but in reality it's just a tool. Like with any tool, you can use it for good. For example, with leverage trading you can actually decrease your risk because it allows you to trade with a bigger position size than what you actually have. So you can have $50 but you can take a $500 position, or if you have $500 you can trade with $2,000 or $5,000. Obviously this means that your downside is quite limited because you're just having a small amount and you can take a big position in the market. That's number one. Number two, it also protects you from a coin management perspective. You don't have to deposit big amounts on exchanges. You can just deposit a small amount, and with leverage you can trade with big amounts. So given all of these different factors, we can see that there are many benefits to leverage. Obviously if you just use it as a gambler, you don't know how it works, you don't know what you're doing, you don't know what is good for, you can easily also use it in a bad way. But most people that watch this channel, most people that understand how leverage works are super successful if you study, if you take it seriously, and if you get going properly, which I hope to show you in this episode. So like I said, we will be using Weex for this tutorial, and Weex is a very nice exchange for several different reasons. Number one, they have many coins. They have many coins. Whatever you want to trade, I'm sure you're gonna find. I mean, you can just keep scrolling and scrolling and scrolling. Many coins here, and as you can see, this never ends. you can find anything. Why is it so good that you can find whatever you want? Because when you see an opportunity in the market, when you want to jump into a trade, and then you open your exchange and they don't have the coin, it's horrible because everything is time limited in the market. You don't have an opportunity forever. A breakout in price doesn't happen forever. You have to act now. You have to be in it now. So if the coin is not listed on the exchange, it's very bad. And unfortunately, some exchanges are a bit greedy today. They don't list the coin just because it's a good coin. They list the coin only if they get a bunch of tokens or if they get paid. And it's a big problem. It's a conflict of interest where they don't list the coins that could make you rich, that could make you a lot of money. That's why Weex is very good. They list many coins. So that's number one. Number two, which is very good, is that it's light KYC. I mean, when you sign up here, you can do most things with either super limited KYC, I mean, barely any KYC, or no KYC. It depends a bit on your details, but in most cases, you will have a way easier time on Weex than on any other exchange. Why is it so? Because Weex is very much customer focused and they respect privacy a lot. And what we've seen across the space is that more and more exchanges add more requirements, more KYC, this and that. With Weex, you're gonna have way smoother time, way smoother time. And finally, Weex offered us a crazy deal here for this tutorial, because if you use the link below and you sign up, you can get a $100 bonus just for signing up. And honestly, it's very good for a tutorial video, because if you sign up and you don't have any money, you cannot follow the tutorial. So you either have to deposit or get the bonus, and here you can get the bonus. Literally just using the link below until the end of July, you will be getting the bonus just for signing up. And it's fantastic. It's fantastic. So do it right now so you can follow the rest of the tutorial. Pause the video, do it right now, and then we will continue with the rest of the tutorial. And so once you have signed up, you will come to this page, welcome bonus, and here you can click around and just claim additional freebies for doing different things. For example, if you add a recovery phone, you will get even more. If you actually trade or in your futures account, you will get even more. If you deposit into your futures account, you will get even more. So the more you click around, the more you activate your account, the more you become a real user, not just an airdrop claimer, but actually you activate as a real user. You start using, you start trading. They see, hey, this person, they're not here just to claim the free, they're also here to activate. Then you can get even more freebies. So you're gonna get rewarded if you activate. And obviously, I think it's a very good thing because you want to know how this platform works, and you want some capital, additional capital to trade and learn, so you don't have to put your own capital only. It's very important, so definitely do that so you have the best possible start in your trading journey. Alright, so once you have claimed all the freebies, once you are fully set up, you go here to futures in the menu and you click on USDM futures. Here is where you will be trading. Here is basically your new home. And as you can see, you can select the coin right here. If you want to trade any other coin, you can find it here. You can search, let's say you want to trade Solana, you click Sol, you search Sol, you can open it up. And you see the chart here on the left. You see the order book here in the middle, and then you have the UI for placing orders here on the right. And I will soon show you exactly how to place an order. It's super simple. Many people are scared, but don't be scared. It's super, super simple. I mean, this is just clicking a few buttons and knowing a few settings, and I will soon tell you all about it. But first, let me explain a bit more on the left here. So on the left, you have the chart. This is a trading view chart. So all of the trading view tools work, like drawing, for example, or doing Fibonacci. Let's say you want to do a fib, you can easily do it like this. Very nice. And any other tool that you normally use in your trading view, you can use here on Weex inside this widget. Then in the order book, you see all of the current orders, all of the buy and sell orders. You can see if there's any sell wall or buy wall, what kind of money the market needs to put in order to smash through the sell wall or smash through the buy wall. You can see how strong the sellers and buyers are. And normal order book. If you are in crypto, I'm sure you know what the order book is. Now here below you see your positions. Very soon we're going to open a position. Here's where our position is going to be. Also we see open orders in case we open a limit order, basically an order that will execute not at the current price but on another price that we specify. They're going to show up here. You will soon see that. Some other interesting things is the funding rate up here. This is either a fee that you pay or a bonus that you get for opening a position, depending on market conditions and depending on whether you're long or short. I will soon explain this to you in detail in a few minutes. Then you see the volume, the stats about the price, and if you go here on info, you can read about the coin. So in this case, it's Bitcoin, market cap, and all the different links. You see the trading rules. For example, you see that you can go from 1x to 400x. If you're super, super bullish on a coin, you could theoretically go 400x. Whether you should do it or not is up to you. But personally, I'm more towards 5x, 10x. Sometimes I do 20x. Sometimes this is more for the next level brave people. But if you want, you have up to 400x. You have the position tiers right here, and all in all, this is quite standard stuff. That's why I'm telling you, if you watch this tutorial, you know how to trade on Weex, but also you know how to trade on most other exchanges because they are basically the same. Next, let's speak about this UI right here, because it is time for us to place our first order, and it's going to be, again, super simple, super easy. You're gonna learn exactly how it works, and we will be starting here on the right, and I will be telling you step by step what to do, what to configure, how to set it up. And the first thing you have to do is to select the mode of the margin you're using. This button is a bit small here, but I think it should maybe be bigger because this is very important. If you click here, you can change the mode, and the mode should be, for all intents and purposes, when you are starting, it should be isolated. Basically, this means that if you have a position that goes against you, let's say that you go long, but the coin dumps, and now you may be in a situation where your position is liquidated. So if you use isolated, only this position that is bad, only that is gonna be liquidated. If you use cross, your other positions may get wrecked as well, because the margin will be shared, and that's not as good when you're starting out. When you're starting out, you want everything simple. One position, one margin. If something liquidates, it's only for that coin. It's not the whole account. So that's why isolated is best. And you can also use combined. Here you can read more exactly what it is, but for all intents and purposes, when you are starting, use isolated and use combined. And the next step is to set up your leverage. If you click right here in this area, you will see this UI where you can set up the leverage for your long positions and your short positions. If you set leverage to 1, this means that you trade with your own money. This means that you don't borrow any money from the exchange. But let's say you switch to 2. Now, this means that you will be trading with double the money that you are putting into the trade. So if you put in $100 into the trade, the exchange will put in another $100, and you're trading with $200. If you put 3x, is the same but 3x. You put in $100, but you're trading with $300. Okay. And here is where this concept, this notion of liquidation comes in. Because if you come with $100, but you take a $300 position, it means that if the price falls by 30%, approximately that $100, you will be liquidated, meaning that you lose your $100. If you trade with 2x, then it means that the price needs to fall 50% for you to get liquidated, because the position size is 200. $100 of that 200 is yours. So if you lose that 100, the exchange will just close the position and liquidate you, because now you have used your money and the exchange doesn't want to lose their money. So when your portion of the position is gone, because you made a losing trade, they will liquidate. Basically, they're going to close the position and you lose all your money. This is very, very important. This notion of liquidation is obviously super important when it comes to leverage. You don't have that when you trade spot. When you trade spot, you just take a position, you buy some coins, you hodl them. Even if they go minus 90%, you still hodl them. With leverage, you need to keep an eye on your liquidation price, because that's very important. So let's say we trade with 2x, okay? You click confirm. And next, you have this limit or market. You need to select the order type. Also, there are other orders here as well, but for all intents and purposes, if you are a beginner, you only need to worry about limit and market orders. So the limit order is that you can select the price at which you want to enter. So let's say that you are maybe a bit bearish on Bitcoin. You think that we're going to come back and we're going to revisit these levels here at 105, 104. You could write 104,000 right here, and you can say, okay, let me enter with $1,000 at this level. And basically, if I do like this, let me open long. So this would be a 2x long that I open at 104k. So let me do like this. As you can see, my liquidation price would be 52. Just like I told you, I do a 2x, meaning that if I open it at 104k, I would be liquidated at 52, because it will be falling 50%. So I confirm. What happens? Now my long position is in the market, and we can see it on the chart right here. Right here. I wanted to remove this line. So on the Bitcoin chart, I can see it right here. This long position, it hasn't executed yet. It is still waiting for the price to fall back to that level. So I have an open order, but it hasn't actually executed yet. So when the price falls here, if the price falls here, Weex will enter automatically a position at 104k with 2x leverage for me. It may happen when I sleep. It may happen, it may never happen also. We don't know if this one's going to come back to 104, but that's how limit order works. That if you select limit order, you can write a price, and if the price ever comes down here, your order will be automatically opened. But in this case, it doesn't look like we're going to come back to 104 anytime soon. So let me just cancel it and let me explain to you what market means. So when I click market, you see that I cannot edit the price, because if I click market, it means that I will be entering a position at the existing price. I mean, whatever price is right now, that's when I will be entering. So if I write $1,000 here and I open a long position, you will have the summary here. Now my liquidation price is 59,000 because current price is 118. So if I do a 2x here, I will be liquidated in case we fall to 59. And I can click confirm, boom. Now I have a long position open, and it is now here. Open orders is where we were before. Now if I come to my position here, I can see that my position is live. I can see my current P&L. Currently we lost 60 cents or something like that. I see my average entry price. So when I do a market order, by the way, it's not a guarantee, especially if I do a big order, it's not a guarantee that it's going to be this exact price. I may have to use some of these other prices in the order book. I may have to use the other positions in the order book in order to execute my price. But on average, this was the execution price. And now we're live. We're trading, and we have now an opened position. And with time, as Bitcoin grows, it's gonna grow and grow and grow and grow and grow. What we need to keep an eye on are the fees. I will soon tell you about the fees, but this is how you enter into a position. And the next thing we have to understand is the funding rate. Now, this may seem a bit weird, but the funding rate is either a fee or a bonus that is applied to your position. It depends if you're long or short. So let me give you a bit of a background. As you know, Bitcoin and other cryptocurrencies, they trade on the spot market. The spot market is like the base market. That's where actual coins are changing hands, and that's where the actual price of those assets is created. When that trading happens in the spot market. When someone buys, someone sells, you have the order book, and then you have the spot price. Now, this futures price that you see right here, it's not actually the spot price. It may be a bit different from the spot price. And when someone goes long, for example, like we did right now, when we went long, we affected this balance towards the longs. We pushed the price of these futures up because we went long. And exchanges such as Weex, they need to have a way to balance this out. So because most people are long right now, most people are pushing the futures prices, the perpetual contract prices, away from the spot price in the long direction, because this is what the market is currently doing. Most people are long right now. Most people are pushing the market up higher and higher and higher, and this disconnects us from the spot market higher, higher, and higher. So that's why we are paying this fee to everyone who is short right now. And this is how exchanges incentivize traders to take the other side of the trade. If you go short right now, actually you would be getting this fee as a bonus. So everyone who is long, they would be paying you this fee. Now, because we are long, we are paying this fee to everyone who is short. And you can see it right here. The funding fee. If you go to your realized P&L, you see the funding fee. Currently, it is 0 because this timer hasn't counted down yet. But once it counts down to 0, we will be charged. Why? Because longs are paying shorts. You can see here, if you hover, long positions are paying short positions. So this is how the exchanges balance this equation out. And sometimes the funding rate is negative, meaning that if you go long, you actually get paid. You get paid for it. This fee will be, this percent will be the bonus that is applied to your positions. So this is something to keep in mind. I mean, now I have zero funding fee, but this may add up if you hold position for longer time. Just be aware that the 0.01% is being charged to your account in each funding period. Whenever this clock ticks to 0, you will be charged. If you are in the side of the trade, which everyone else is in, where the popular side of the trade, and if you are on the other side of the trade, you take the less popular trade. For example, if you go short right now in Bitcoin, then you will be getting it as a bonus. So this is a way how exchanges basically make taking the other side of the trade more profitable, and they attract more traders to do that because now you have more opportunities. You have more trade ideas that make sense to go short, and that's what the funding fee is, and that's what you need to keep in mind. When you are looking at your trade, your P&L, this fee is very important to look at. Alright guys, moving on. If you do leverage trading, you absolutely have to set a stop loss. If you trade without a stop loss, you're begging to get wrecked very, very quickly. So, as you can see right here, when we have a position open, you can set stop loss, it's SL, and you can set the take profit, TP. So, let's set a stop loss. We click SL, and here, you specify at what price you want the stop loss to trigger. So in this case, let's say that if the price goes to 100K, then I want to close this position. I want to be out as soon as possible. And next, you need to select whether you want a market price, meaning that the exchange will just dump your position to whatever price that is available. And if you want that, then you click market price, and you can select how many dollars. So in this case, we put in 1,000. After all the fees, now we have 998. And yeah, so you can select, do you want to close it fully? What do you want to do? You want to close 50%? You want to close? So this is very, very key. Whenever you enter a trade, always have a stop loss. Here, if you click limit, Here you basically will only be selling at this exact price at when the 100k hits, you will be creating a limit order at 100k, and it may or may not execute fully, because if the price dumps fast, maybe it's at 100k for a millisecond, then it goes to 95, and then your limit order may not come through. So it's a bit of weighing here, a bit of risk reward, but for all intents and purposes, select market, especially if you're trading with a few thousands or a few tens of thousands even. Market is good enough. I mean, it's not gonna, if you trade with hundreds of thousands and millions, then you probably need to use the limit, because otherwise you may crash the order book if it's some kind of big move and liquidity is not in place. But yeah, market price is for all intents and purposes. If you are a beginner trader, use the market price, set the stop loss, and take profit exactly the same, but you just specify at which price you want to take profit. So let's say at 150k here, I want to take profit. So you specify, do you want the market order or limit order when that price hits, and do you want 25, 50, 100% of your position. So that's how stop loss and take profit orders work, and you absolutely have to set at least the stop loss, but ideally both stop loss and take profit. Another important thing I want to show you is that you can actually adjust your leverage after you've opened your positions. For example, now we have a 2x leverage. Let's say if this position pumps in the direction I want, let's say that we'll go to let's say we go above the previous all-time high. Let me actually go to lower time frame. Let's go to 4-hour chart. So I enter the position here. Let's say we pump above 123. We go to like super new all-time high, and there's a massive breakout, massive momentum, and you see momentum is crazy. What can you do? You can actually increase leverage. So it's smart always to start with a bit lower leverage, because you don't know, you take a bet here. Maybe it's gonna play out, maybe not. If it doesn't play out, you can close quickly and take a small loss. But let's say it does play out in your favor, and you see, holy crap, it's moving in my direction. Let me be more ballsy. So in this case, you could go here. You can change it to 5x. Confirm. Obviously, now you need to ensure you understand what has happened here with the changes. As you can see, I kept margin. I have quite a lot of margin for this position, so my liquidation price is actually the same. But if you want, you can also withdraw margin. Okay, so because we're now at a higher leverage, I can take this money out. Before I needed to have it at 2x. Now I can, if I remove this margin, as you can see, my liquidation price now jumped a lot to 93. And this is how you can manage margin. Basically, when you see that we're close to the liquidation price, you can add margin. If we're far away, you can remove margin. And obviously, this money that I just removed from margin, I can use it for other positions. I can withdraw it. I mean, I can do different things. And so, yeah, if you want to add back margin, you can go here. You can add, let's say we add back that 450 or where it was, like so. And you see here the margin ratio. If this thing goes to 100%, you will be liquidated. And as you can see, now it fell. When I added margin back, it fell. So this is how you can adjust leverage. When you adjust leverage, you are now able to withdraw a bit of margin, because that's the whole idea. When you adjust leverage, you can play with the house's money, and you take out your own money. You can do other things with it. If you take out your own money, your liquidation price will change. And that's how those things work here with adjust leverage and the margin button. Additionally, you see these three buttons here. If you start with this close button, if you want to close a position, you can enter the closing price and it's going to close at that price. If you want a flash close, it's going to close as soon as possible using any price in the order book. Basically, it's going to prioritize your closing. You want out now. You click here, it's going to do that. And the next reverse is basically, let's say for some reason you change your mind about the market. Maybe it got rejected. Maybe you thought that the price would break out and it didn't, and instead it starts falling quickly. You can then quickly just go from long to short or vice versa. So here, for example, let's say that with my $1,000, I click confirm. What happens? Now I'm short. I'm short. And of course, I can adjust leverage if I want here. Yeah, keep in mind all the other stuff with the margin and everything now that you know. But on this note, let me close this position. And now you understand the whole flow of opening position. We started here, we went down here, we opened position, we clicked at all of the buttons, and I taught you all of the buttons. So now you should have a quite good end-to-end understanding of this process. Now let's speak about how you decide when to open a position, how you decide when to set a stop loss, and so on and so forth. So as you know, personally, I love the money line. The money line is an indicator which you get if you join the Bull Mania Pro plan. You find the link below in the description. You get the money line. You also get the Bull Mania terminal, where you can see all of the different coins that recently flipped bullish. And you can see, is it in the last day or 2 days that they flipped? And then you can see that if you open position here when it flips bullish, you can set a stop loss at the bear flip price. So for example, now if you're trading Bitcoin, a good strategy is to set stop loss at this level right here, 102. Because on the weekly, that's when Bitcoin will enter a bearish trend. And also in Bull Mania, I teach you so much about trading. I have 2-week course. It's 1 video per day, approximately 5 to 10 minutes per day, and it teaches you so much: the mindset, how to enter, how to exit, and you should really take it. You should join the Bull Mania Pro in order to get the money line, to get the Bull Mania terminal, to get the Discord, to get the course, and so on and so forth. So that's how I do it. I enter when things are bullish, and then I exit when things are bearish. Now, there are a few other things you can look at. For example, the simple support resistance. I mean, once you break resistance here, for example, was a massive resistance. Once you break resistance, you can open a trade. And in case, let's say that we're breaking it, you open a trade. Let's say in case we fall back below resistance, you set a stop loss there. Super, super simple strategy. Another important one is breaking out from a previous dump. This one is super important. Let's say here, for example, you see that Bitcoin really accelerated down here, like super fast. It accelerated down here. Normally, when it accelerates like this and it comes back, it's a good position to open a trade in. And then even if it didn't recover this previous highs, it can still do very, very well. Then there is a pattern which we are currently monitoring, which is the inverse head and shoulders. It looks like this: bam, 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 and the target of it is 150k. Let's say that the price falls back into this, 105, 102, really goes into the lower prices here. Then it is invalidated, so you can set a stop loss there. So as you can see, there are many different pieces of tactics that you can get by watching this or watching other YouTubers. But really, you need not a tactical, but a strategical, like a bigger overview, understanding of what trading is, how it works, how to think about trading, how to not get wrecked, how to be disciplined, how to select which trades you enter. And for that, you should enter the Bull Mania Pro. Enter it, you're gonna get the course, you're gonna get the indicators to actually know what's bullish, what's bearish in real time. You can enter when things flip, and that's what I would tell you. Enter Bull Mania, learn properly so you understand properly. Thanks for watching, guys. I'll see you in the next one.